Starting your business, part 3, books and records. That's what we're talking about today. What's up, guys? Back at it again. Hey, we're in the home stretch. Part 3 of 3 today. We're rocking. We're rolling. We got the entity set up. We got our business bank and credit card set up. Now it's time to get organized because it all starts with clean books and clean records. Without accurate bookkeeping, we can't do any of the tax strategy that we preach here at Ledgerly. And if you love that tax strategy, make sure you hit that subscribe button to subscribe weekly for the latest and greatest topics that Andrew and myself are rolling out for all of our clients. Okay, so books and records for your business. Again, we're talking to you freelancers. We're talking to you side hustlers. And we're talking to you full-fledged business owners. This all applies to you. All right, full disclosure here. We are not sponsored by QuickBooks by any means. However, Andrew and myself are QuickBooks Pro advisors, and we'll get into that in a little bit of why that's so important. So there's a lot of different bookkeeping softwares out there. There's Wave, there's Xero, there's Sage. Andrew and myself have worked with all of them, but we got to say QuickBooks is probably the most user-friendly out of the bunch. So we always recommend QuickBooks to all of our clients. Now, QuickBooks has a lot of different products. If we go to QuickBooks Online, we have Simple Start, Essentials, Plus, and Advanced. Simple Start is basically the most basic of them all. Advanced is, okay, you need a lot more features. You need inventory tracking, location tracking, classes, fixed assets. There's a lot more that comes with the advanced modules. So QuickBooks Online, and then the pricing up here. So we're pro advisors, so we can pass on a 30% discount if we set it up for you. Basically $25 a month, all the way up to $165. Now, if you're going to set it up yourself, you're going to be paying the top tier. You're going to be paying $235 a month at the high end or $35 a month at the low end. Now, pro advisor discount. If we set it up for you, full disclosure, we do charge a one-time implementation fee. You can pay that all up front or straight line it over a 12-month addition to your monthly billing cycle. Now, on that note, very important, there is a new QuickBooks subscription for the simple of businesses. Really, if you just need to track your ins and outs, there's a thing called QuickBooks Ledger. Simple Start is the cheapest, $35 a month. QuickBooks Ledger, $10 a month, plus taxes and fees. So that's $10 a month, $120 for the year, which us, the team at Ledgerly will have access to and can help with your bookkeeping, can even do your bookkeeping for you for a measly investment of $120 for the year. Now, the catch with QuickBooks Ledger is that us as the accountants will have to integrate it for you. So you have our implementation fee plus the $120 for the year, which I know that's going to be peanuts to you because you're absolutely going to crush it in business. And you're going to have Ledgerly in your back pocket with a bunch of other great referral sources that we're going to give to you. And you're going to be rocking and rolling and grinding it out and absolutely crushing it in business. So QuickBooks, yes, there's a lot of great options. Now let's head over to a sample company. Okay, full disclosure. QuickBooks has some amazing features and amazing free resources on YouTube, on their website for you to learn on your own time. In fact, we go back to their website. They have a whole tab right here, training and resources. Look at this, getting started. If you want to be a pro advisor, resources here, news in the community. When you go over to their QuickBooks, if we go up to their settings, they have a ton of video tutorials down here. So what we're going to be going over today is just scratching the surface on everything that QuickBooks can do. What we're going to go over today is what we do after we accomplish step 2. What was step 2? Let's rewind back. We got our business bank account and we got our business credit cards. Cool. So we're ready to rock. So when you get into QuickBooks, you're going to be greeted with a screen just like this. Craig's Design and Landscaping Services. So let's say Craig just started up this business. He went to the bank. He got his business account. He got his credit cards. Where do we start from there? When we set up our QuickBooks account, we're going to go over to transactions over here. Okay, so in the bank transaction section, we already see that Craig already linked his accounts. He's got his checking account. He's got a savings account and he's got a credit card link. Cool. In the event that you haven't linked it already, we're going to go here, link account, and you're going to log in to your online banking profile. We went with Chase in our last video. So we would click on Chase. Obviously, it's not going to work because it's a sample company, but it would prompt you for your username and password, maybe a 2-step verification. And then it's going to ask you what accounts you want to connect. And you're going to want to connect all of your business bank accounts. Now, very important. Extremely important. When you connect, you're going to want to make sure you're capturing all of the transactions from inception. Because if QuickBooks is your first bookkeeping software, we're going to want to make sure we're capturing all the prior revenue and all the prior expenses so we have the right retained earnings to know what the business is worth for you. What's the value of your company? How much equity have you put into the company? So cool. Very important note there. So now we're connected. We're in. We got our checking set up. We got our savings set up. We got our MasterCard set up. Now you'll see here, bank balance. All right, Craig's a little low. I think Craig needs some help with his accounts receivable. So Craig has 25 transactions in his checking account right now. We have our spent, we have our receipt. Now, the rule of thumb is here for bookkeeping, for our spent transactions. See right here, we see that there's a couple matches coming in. Those are easy. That's cool. We'll match those. But the overall rule of thumb, money going out of the business, what is it? Is it paying vendors? Is it paying off the payables? Is it paying off a credit card? Is it paying the owner? Is it paying Craig? Is he taking money out of the business as a distribution? So is it going to impact the profit and loss, or is it going to impact the balance sheet, right? Okay. So now on the flip side of the coin, the money coming into the business, is it revenue? Is it going to impact the P&L, right? Or is Greg putting his own money into the business? Is it going to be equity on the balance sheet? Or is he taking out a loan? Is he financing a piece of equipment? Is it a line of credit? So again, balance sheet or profit and loss? That's where the crucial bookkeeping mistakes come into play. And that's where you want a good bookkeeper and tax advisor on your side to make sure you're capturing these ins and outs in the right areas. Real quick story for you. We had a client who was doing their own bookkeeping, and they had a business credit card. When the credit card gets swiped, there's two sides of that transaction. There's the credit card liability that increases, and then there's the expense that increases, or the asset that increases. Okay. Whenever homie was making credit card payments, he wasn't putting those payments as credit card payments as a reduction to the liability, to his credit card liability. Homie was putting those on the profit and loss. So the dude had, I want to say it was like $75,000 of excess expense on his profit and loss, which actually wasn't an expense because the expense was already captured from the time he swiped the credit card. So he had double the expenses on his profit and loss, which then what happened? Those increased his profit, which increased his taxable income, which increased his tax due. I'll let that settle. Let that sink in. Cool. So Craig still has 24 transactions here. He has to categorize. He's got 7 on his MasterCard. He's got 1 on his savings. Let's match that. Now, when we're done doing our bank transactions, what we want to do is go over here to our Reconcile transactions. These are the bank reconciliations. And then we'd go to bank. We'd enter in the statement ending balance, the statement ending date, and start a bank reconciliation. Let's put in 0, and we'll do the ending date as today, just to get in there and see what we're looking at, okay? The goal up here is to make it so it reconciles to 0. Green means go. Green means good. Green means ledgerly. So, all seriousness, our transactions, that's key. Reconciling, that's key as well. The other thing too is receipts. You can house all of your receipts in here. You can set up a QuickBooks email address and email them right to your QuickBooks email, and everything will be housed in here. Once you're done with the receipts, once you're done reconciling, if we head on over to our reports, there's 2 main reports that we want to know as a business owner. We have the balance sheet. We're going to run through this really quick. We have cash. He's got $2,000 in cash. Remember I said maybe someone wants to keep an eye on his receivables? Well, look, he's got $5,200 in receivables, right? If he collected on that, his cash goes from the negative to the positive in his bank. He's got some inventory. He's got some undeposited funds. He's got a truck on the books. He's got his payables, what he owes. He's got a note payable, a loan payable. The balance sheet in a nutshell is showing what you own as the business owner and what you owe as the business owner. The difference between those two is your equity in the company. And then, of course, the profit and loss is the other report that we want to make sure that we know. What's coming in, what's going out. So Craig has all his different services broken out here. Landscaping services, his job materials, his labor, all tallying up to about $10,000 in revenue. But you're a business owner. You can write off these expenses. Cost of goods, fuel, job materials, his legal and professional fees, meals, entertainment, gas, all that stuff. Again, we're only scratching the surface here in QuickBooks. But up here, video tutorials. There are tons of great free resources on YouTube within QuickBooks. So if you want to DIY, do it yourself, please make sure you're dialing into these resources. Or if you don't have the time for that, you just want to focus on the operations and producing revenue for your company, make sure you hire a bookkeeper. All right, big step back. Like I said before, we are just scratching the surface with QuickBooks. But the overall goal of this video is to make sure you have that separate books and records aside from your personal. So then you as the business owner can dial in every day and see where you're at with your cash flow. See where you're at with your profit and loss, which is crucial when it comes to tax planning. Hey, step 3 in this video series is just the start, is just the foundation of valuable tax planning and strategy for you and your business. So I hope this little series was very helpful for you. We got our entity formed, we got our business bank and credit card set up, and we got our QuickBooks account set up. Now it's time to really put your money to work for you and start that tax strategy. Save on taxes, put away for retirement, start that generational wealth building, whole 9 yards. This, my friends, building a business is just chapter 1 in your wealth building journey. So thanks for tuning into this series, and we'll see you on the other side.